ParthKuchana.com, complete fundamental and technical analysis of stocks and other financial industry updates. Hello, welcome to Partha Kuchana Finance channel. This video provides complete fundamental analysis of State Bank of India SBIN stock. Disclaimer: this analysis is for educational purpose only. This is not financial or investment advice. Make financial and investment decisions on your own. Valuation. Let's focus on assessing return on capital, equity efficiency, overall pros and cons, and valuation and calculation of key ratios and interpret them. This is based on market cap, current price, high-low, ROCE, ROE, P/E ratio, book value, face value, financial ratios data. Fundamental analysis. Return on capital employed, ROCE. SBIN's ROCE stands at 6.16%. This ratio measures how effectively the company is using its capital to generate profits. A ROCE of 6.16% is relatively low, suggesting that the company's capital is not being utilized as efficiently as it could be. Comparatively, industry benchmarks typically expect a higher ROCE, indicating that SBIN might need to improve its operational efficiency or investment strategies to enhance returns on capital. Return on equity, ROE. SBIN's ROE is 17.3%. This reflects the company's ability to generate profit from shareholders' equity. A ROE of 17.3% is quite strong, especially in comparison to industry standards. It demonstrates effective management and profitability, indicating that the company is providing a good return to its shareholders. The increasing trend in ROE over the past few years is a positive indicator of improved financial performance. Price to earnings, P/E ratio. The current P/E ratio of SBIN is 9.94. This relatively low P/E ratio suggests that the stock might be undervalued compared to its earnings. In general, a lower P/E ratio can indicate potential undervaluation or lower investor expectations. However, it's important to compare this with industry peers to determine if the stock is indeed undervalued or if there are underlying issues affecting its valuation. Book value. The book value of SBIN is 465 rupee per share. This figure represents the net asset value of the company per share and serves as a baseline for evaluating stock value. When compared with the current price of 812 rupees, the stock is trading at a premium to its book value. This premium might indicate that investors are willing to pay more for the stock due to expectations of future growth or other intangible assets not fully reflected in the book value. Face value. The face value of SBIN's stock is 1 rupee. This is a nominal value and does not reflect the market value or the actual worth of the stock but serves as a reference point for the company's equity structure. Pros and cons. Pros. Strong profit growth. SBIN has delivered a notable profit growth of 98.7% CAGR over the last 5 years, highlighting substantial improvements in profitability. Healthy dividend payout. The company maintains a healthy dividend payout ratio of 18.1%, providing consistent returns to shareholders. Cons. Low interest coverage ratio. The company has a low interest coverage ratio, which might indicate potential challenges in meeting interest obligations from operating profits. High contingent liabilities. With contingent liabilities amounting to 24,65,418 crore rupees, the company faces significant financial obligations that could impact its future financial stability. High other income dependency. Earnings include substantial other income of 1,51,296 crore rupees, which may inflate profits and mask underlying operational performance. Conclusion. SBIN exhibits strong profitability through its high ROE and significant profit growth, though it faces challenges with low ROCE and high contingent liabilities. The stock's low P/E ratio suggests potential undervaluation, while the high premium over book value indicates investor confidence in future growth. The company's healthy dividend payout and consistent profit growth are positive aspects, but attention should be paid to the low interest coverage ratio and dependency on other income. Financial health. Let us focus on financial health and leverage analysis. Review asset and liability management and equity changes. This is done focusing on assets, liabilities, equity, key metrics from the balance sheet over the last several quarters. Equity capital. The equity capital of SBIN has remained constant at 892 crore rupees from March 2021 to March 2024. This stability in equity capital indicates a consistent base of shareholder equity over this period. Reserves have shown a consistent upward trend, increasing from 1,24,349 crore rupees in March 2013 to 414,047 crore rupees in March 2024. This substantial growth in reserves reflects a strong accumulation of retained earnings, which enhances the bank's ability to absorb losses and support future growth. Borrowings have also increased significantly, rising from 1,831,126 crore rupees in March 2013 to 5,606,147 crore rupees in March 2024. This substantial increase in borrowings highlights the bank's reliance on external debt, which could indicate expansion efforts or increased lending activities. However, it is crucial to monitor if this growth in borrowings is proportionate to asset growth and revenue generation. Other liabilities have grown from 1,76,355 crore rupees in March 2013 to 712,669 crore rupees in March 2024. This growth in liabilities reflects an increase in the bank's obligations beyond borrowings, which could include various operational and financial commitments. Fixed assets have shown moderate growth, increasing from 8,694 crore rupees in March 2013 to 46,072 crore rupees in March 2024. The significant jump in fixed assets around March 2016 could indicate major investments in infrastructure or technology. CWIP. Construction work in progress CWIP has fluctuated over the years, with a notable decrease from 695 crore rupees in March 2017 to 42 crore rupees in March 2024. This reduction suggests a completion of construction projects and possible capitalization of previously ongoing work. Investments have grown substantially from 519,343 crore rupees in March 2013 to 2,110,548 crore rupees in March 2024. This significant increase in investments highlights the bank's strategic allocation of resources into various securities and assets, which could enhance income and asset diversification. Other assets have increased from 1,603,801 crore rupees in March 2013 to 4,577,093 crore rupees in March 2024. This growth indicates a rise in various asset categories that are not specifically detailed, potentially encompassing increased holdings in financial instruments, real estate, or other investments. Total assets and liabilities. The total assets of the bank have grown from 2,132,514 crore rupees in March 2013 to 6,733,756 crore rupees in March 2024, reflecting a robust expansion in the bank's asset base. Similarly, total liabilities have increased from 2,132,514 crore rupees in March 2013 to 6,733,756 crore rupees in March 2024. The proportional increase in liabilities with assets is a common characteristic of growing institutions, but it is essential to ensure that the growth in liabilities is sustainable and matched by corresponding asset quality and revenue generation. Analysis. Financial health. The increase in reserves and total assets indicates a strong financial position with substantial retained earnings and asset base. The growth in borrowings and other liabilities needs careful monitoring to ensure that the bank maintains a healthy leverage ratio and financial stability. Leverage. The significant rise in borrowings relative to equity suggests increased leverage. While this can support expansion and growth, it also adds financial risk. Evaluating the bank's ability to service this debt through income generation is critical. Conclusion. SBIN has demonstrated robust growth in assets and reserves, reflecting strong financial health and expansion. However, the substantial increase in borrowings and other liabilities warrants close attention to ensure that the bank manages its leverage effectively and maintains a balance between growth and financial stability. Cash flows from financing activities. Now let's look at the trend and interpretation of cash from operating activities, cash from investing activities, cash from financing activities, net cash flow. This is done focusing on cash flow data over the last several quarters. Trend and interpretation. Cash from operating activities. The cash flow from operating activities exhibits significant volatility. It shows a high of 89,919 crore rupees in March 2021 and a low of minus 96,508 rupees crore in March 2018. Recent years have seen both positive and negative fluctuations, with a notable negative value of minus 86,014 rupees crore in March 2023 and a recovery to 21,632 crore rupees in March 2024. The substantial variability suggests periods of operational challenges or exceptional cash flow items, which could be related to changes in working capital, regulatory impacts, or significant operational adjustments. Cash from investing activities. This category has consistently been negative, indicating ongoing investments in assets, infrastructure, or acquisitions. Significant negative values like minus 4,572 rupees crore in March 2017 and minus 3,476 rupees crore in March 2024 reflect continued capital expenditure or investment activities. The occasional positive cash flow, such as in March 2018, suggests temporary changes or receipts from investing activities, possibly from asset sales or investment income. Cash from financing activities. Cash flows from financing activities have also shown considerable variability. The bank has had both inflows and outflows, with large positive values such as 7,143 crore rupees in March 2021 and significant outflows like minus 9,896 rupees crore in March 2024. This variability indicates fluctuations in financing needs, possibly due to changes in debt issuance, repayments, or other capital management strategies. Net cash flow. Net cash flow has fluctuated widely, with a peak of 93,392 crore rupees in March 2021 and a low of minus 77,908 rupees crore in March 2018. The recent period shows a recovery with a positive net cash flow of 8,260 crore rupees in March 2024. This volatility in net cash flow, influenced by the fluctuations in operating, investing, and financing activities, suggests periods of financial strain and recovery. Pros. The ability to generate substantial positive cash flow from operations, as seen in some years, indicates strong operational performance and capacity. The positive net cash flow in recent years, despite fluctuations, shows potential resilience and recovery capability. Cons. High volatility in cash from operating activities and net cash flow may reflect underlying operational or strategic challenges. Significant negative cash flows from operating activities in certain years raise concerns about sustainability and operational efficiency. Fluctuations in financing cash flows suggest potential instability in capital management or external financing needs. Conclusion. SBIN's cash flow statements reflect a mixed but generally improving trend in recent years. While there is strong performance in some areas, the substantial volatility, particularly in operating and net cash flows, indicates periods of significant financial stress. The bank's ability to generate positive cash flow from operations and manage its financing activities is crucial for maintaining financial stability. Monitoring these trends closely is essential to understanding the bank's long-term financial health and operational effectiveness. Revenue trends, profit margins, expense management. Let us now focus on revenue trends such as growth or decline, seasonality. Profit margins, like gross profit margin, operating profit margin, net profit margin, and expense management. Revenue trends. SBIN has shown a steady increase in revenue over the past decade, growing from 1,67,976 crores rupees in March 2013 to 455,971 crores rupees in March 2024. This upward trend, with notable acceleration in the recent years, suggests strong business expansion and increased market share. The significant jump from 289,973 crores rupees in March 2022 to 350,845 crores rupees in March 2023 and then to 455,971 crores rupees in March 2024 indicates robust growth, likely driven by improved operational performance and market conditions. Profit margins. Gross profit margin details aren't directly available, but the increasing revenue alongside rising interest and expenses indicates a potential need to closely monitor operational efficiency. Operating profit margin trends reflect considerable fluctuations. The financing profit margin shows a negative trend, worsening from -3% in March 2013 to -13% in March 2024. Highlighting ongoing challenges in managing interest expenses versus revenue. Net profit margin. The net profit margin has improved significantly from 11% in March 2013 to 15% in March 2024, indicating enhanced profitability and effective cost management in recent years. Expense management. Expenses have risen steadily from 66,283 crores rupees in March 2013 to 241,415 crores rupees in March 2024. The increase in expenses is aligned with revenue growth, though the rate of expense growth has outpaced revenue growth, which could impact profitability if not managed effectively. The significant rise in interest expenses from 106,818 crores rupees in March 2013 to 273,392 crores rupees in March 2024 highlights the impact of rising cost of funds. Earnings before interest and taxes, EBIT, and earnings per share, EPS. EBIT trends. EBIT has shown volatility with a notable decline in certain years, example March 2017, but has improved recently, indicating better operational efficiency and profitability. EPS trends. EPS has significantly improved from 26 rupees and 19 paise in March 2013 to 76 rupees and 5 paise in March 2024. This increase reflects substantial growth in earnings, driven by higher revenues and improved net profit margins. Profitability ratios. Return on equity, ROE is not provided directly but can be inferred from net profit growth and EPS improvements. The significant rise in net profit and EPS suggests a strong return on equity. Return on assets, ROE similar to ROE. ROE is implied through improved profitability metrics, indicating effective use of assets to generate earnings. Exceptional items and non-recurring costs. There are notable instances of exceptional losses, such as in March 2017, which impacted overall profitability. The recent reduction in financing losses and increased other income has helped in mitigating the impact of such exceptional items. Impact on company stability. Revenue consistency. The consistent revenue growth underscores a stable business model and robust market position. Profitability analysis. Improved profit margins and EPS trends indicate better expense management and profitability. However, the negative financing margins suggest areas for improvement in managing interest-related costs. Earnings trends. The significant improvement in EPS and net profit in recent years signals strong financial health and stability. Overall, SBIN's financial performance shows a positive trajectory with notable revenue growth, improved profitability, and effective cost management in recent years, despite some challenges with interest expenses and exceptional losses. Overall performance, growth trends, profitability, and operational efficiency. In this section, let us focus on highlighting overall performance, growth trends, profitability, and operational efficiency. Provide insights into the company's financial health and potential future outlook. This is done based on trends and growth, profitability and margins, operational efficiency, profit before and after tax, earnings per share, EPS, details from quarterly earnings reports over the past several quarters. Trends and growth. The revenue of SBIN exhibits a consistent upward trend over the observed quarters, increasing from 68,960 million rupees in Q1 FY 2022 to 118,242 million rupees in Q1 FY 2025. Notably, the highest revenue growth is seen between June 2023 and March 2024, where revenue surged from 101,460 million rupee to 117,469 million rupees. This growth suggests a strong and positive performance trajectory, reflecting effective business strategies and market expansion. Profitability and margins. Operating profit margins, OPM %, have shown fluctuation, starting at -20% in June 2021 and improving to -6% by June 2024. This positive trend indicates an improvement in the operational efficiency of the company, although the margins remain negative. The significant improvements in OPM % between June 2023 and March 2024 highlight the company's ongoing efforts to control operating costs and enhance profitability. Operational efficiency. Operating profit and expenses demonstrate variability. Operating profit increased significantly from 10,320 million rupees in June 2021 to 26,428 million rupees in June 2024, reflecting better operational efficiency. Expenses also showed some volatility, peaking at 65,418 million rupees in March 2024. The consistent zero depreciation across quarters suggests stable asset management. The overall operational efficiency appears to be improving, supported by the reduction in financing losses and better revenue generation. Profit before and after tax. Profit before tax, PBT, showed a positive trend, growing from 10,320 million rupees in June 2021 to 26,428 million rupees in June 2024. This increase is driven by higher revenue and improved operational efficiencies. Net profit also increased from 7,703 million rupees in June 2021 to 20,094 million rupees in June 2024. Tax percentages remained relatively stable around 25 to 27%, with a minor decrease in March 2023 to 22%. The positive growth in net profit reflects improved financial health and operational performance. Earnings per share, EPS. EPS has demonstrated a general upward trend, rising from 8 rupees and 27 paise in June 2021 to 21 rupees and 65 paise in June 2024. This trend highlights increasing profitability and effective earnings management. The peak in EPS in March 2024, reaching 23 rupees and 96 paise, suggests a strong financial performance and value creation for shareholders. Conclusion. SBIN has shown a robust financial performance with consistent revenue growth, improving profitability margins, and enhanced operational efficiency. The positive trends in profit before and after tax, along with the rising EPS, indicate a solid financial health and growth trajectory. Despite the fluctuating OPM % and expenses, the overall performance reflects a well-managed company with promising future outlook. Company stability and competitive positioning. In this section, focus is on current market price, price positioning, price to earnings ratio, PE, valuation comparison, growth expectations, market capitalization, size and stability, investor confidence, dividend yield, dividend %. Income generation, company strategy, net profit, profitability comparison, profit trends, quarterly profit variation, growth volatility, performance trends, sales, revenue scale, revenue consistency, quarterly sales variation, sales growth, market trends, return on capital employed, ROCE %, efficiency and profitability, comparative performance, compared to peers in the same industry. Analysis of SBIN's financial metrics relative to peers. Current market price, CMP. SBIN's CMP is 811 rupees and 65 paise, which is significantly higher than most of its peers. This high valuation might reflect strong market confidence or a premium valuation relative to its competitors. Price-to-earnings ratio, PE. With a PE ratio of 9.94, SBIN's valuation is somewhat below the median PE of 9.88 among its peers. This indicates that SBIN is valued slightly lower relative to the industry average, which could suggest a potentially undervalued stock or lower growth expectations compared to peers. Market capitalization, market. SBIN's market capitalization of 724,323.41 crore rupees is the highest among its peers by a significant margin. This large market cap underscores SBIN's dominant position in the industry and reflects a higher level of investor confidence and market dominance. Dividend yield, div by LD%. SBIN's dividend yield of 1.69% is on the lower end compared to peers, with the median being 1.88%. This suggests that SBIN prioritizes reinvesting profits into growth rather than distributing them to shareholders. Lower dividend yield could be a result of high stock price or a strategic focus on capital expansion. SBIN's latest quarterly net profit of 20,094.36 crore rupees is significantly higher than the median net profit of 2,230.64 crore rupees among peers. This indicates strong operational performance and a leading profitability position within the industry. Quarterly profit variation, QTR profit var %. The quarterly profit variation for SBIN is 4.25%, which is considerably lower than the median of 23.7%. This lower variation suggests more stable profitability compared to peers, indicating a robust and consistent business model. Sales QTR RCR. SBIN's quarterly sales of 1,18,242.45 crore rupees far exceed the median sales of 16,043.13 crore rupees. This positions SBIN as a major player in terms of revenue generation within the industry. Quarterly sales variation, QTR sales var %. With a quarterly sales variation of 16.54%, SBIN's sales growth is higher than the median of 15.25%. This indicates relatively strong and consistent revenue growth compared to peers. Return on capital employed, ROCE %. SBIN's ROCE of 6.16% is slightly above the median of 5.64%. This indicates that SBIN is efficiently utilizing its capital to generate profits, performing slightly better than the industry average. Impact on company stability and competitive positioning. Strengths. Market leadership. SBIN's high market capitalization and net profit reflect its dominant market position and operational strength. Stability. Lower quarterly profit variation suggests SBIN's profitability is relatively stable compared to peers. Revenue generation. Strong sales figures indicate effective market penetration and operational scale. Weaknesses. Valuation. The lower PE ratio and dividend yield could suggest undervaluation or less focus on shareholder returns compared to peers. Growth potential. SBIN's higher sales and stable profitability suggest robust growth potential relative to its peers. The strong performance in sales and net profit indicates a favorable position for future expansion. Market sentiment. The high CMP and market cap reflect positive investor sentiment, though the lower PE ratio could imply some concerns or conservative growth expectations. Risk assessment. The lower dividend yield and PE ratio, combined with high revenue and profit stability, highlight a focus on reinvestment and growth rather than immediate shareholder returns. The stable ROCE and lower profit variation mitigate concerns about operational risks. In summary, SBIN stands out as a leading player in its industry with strong financial metrics compared to peers. It shows considerable market strength and operational efficiency but may need to address concerns related to valuation and shareholder returns to align with market expectations. Changes in promoter, FIIs, DIIs, government, and public shareholding. In this final section, let us evaluate the company's ability to generate cash and manage its financial obligations. with focus on changes in promoter, FIIs, DIIs, government, and public shareholding with the objective of evaluating stability and investor confidence. Shareholder pattern analysis. Promoters. The promoter shareholding in SBIN has remained relatively stable, fluctuating between 57.49% and 57.62% over the past 3 years. This stability indicates strong control and confidence from the promoters in the company's performance and future prospects. Consistent promoter holding suggests a solid commitment to long-term growth and strategic direction. Foreign institutional investors, FIIs. FIIs have shown a positive trend in their shareholding, increasing from 10.55% in September 2021 to 11.15% in March 2024. This growing interest reflects increasing confidence from foreign investors in SBIN's financial health and potential for growth. It is a positive sign for the company's international reputation and attractiveness to global investors. Domestic institutional investors, DIIs. DIIs have experienced a slight decline in their shareholding from 24.17% in September 2021 to 23.61% in March 2024. This decrease might suggest a marginal reduction in confidence or shifting investment preferences among domestic institutions. However, the overall level remains substantial, indicating continued institutional interest. Government. Government shareholding has remained minimal at 0.03% consistently. This minimal presence suggests that the government does not play a significant role in the ownership structure of SBIN, which aligns with the company's position as a public sector entity with more substantial shareholding from other stakeholders. Public shareholding has experienced some fluctuation but has shown an overall increase from 7.51% in September 2021 to 7.67% in March 2024. This increase indicates a growing public interest in SBIN's stock, which can be a positive signal for liquidity and market acceptance. Number of shareholders. The number of shareholders has increased significantly from 26,40,152 in September 2021 to 36,13,127 in June 2024. This substantial growth in the shareholder base indicates rising investor confidence and broader market participation in SBIN. Conclusion. SBIN's stable promoter shareholding and increasing FII interest reflect a solid foundation and growing confidence in the company. The slight decline in DII shareholding and the minimal government presence have less impact on the overall stability. The increase in public shareholding and the number of shareholders suggests improved investor sentiment and market acceptance. Overall, SBIN appears to be in a strong position with a diverse and expanding investor base, which supports its ability to generate cash and manage financial obligations effectively. Thank you for watching. If you like this analysis, please like, share and subscribe. Also, do not forget to visit parthkuchana.com.